The market, the S&P 500's kind of gone nowhere in about 3 or 4 weeks. It did bump its head against the 4,600 level. You hear a lot of talk about seasonal weakness in August, and sentiment got overheated. Where do you think that leaves us in terms of whether we're in store for a deeper pullback or maybe just a breather?
Yeah, I think we're definitely in the terms of breather territory. I agree with you. We're seasonality. We're in a couple of challenging months as we get into September. However, I think it's important to take note of the levels that I see on the S&P 500 equal weight. We are looking to overcome the first lower high of the downturn, and we need to overcome that level before we can have a new higher high. So I need to see the equal weight index be above consistently on a weekly basis, 63.21. I need consistent weekly closes. And I see we failed to make that higher high as we came up to that level. But what I do see is even though we're failing to make higher highs, we're still making higher lows. So sideways is a direction. That is the best case scenario for a sideways direction, is we still have the lows ticking up higher. So eventually we'd have that broader participation that's needed, see those consistent closes above 63.21, and that would support a new bull base case for 4,600. But I need to see that broader participation first. But a lot of the other fundamental and macroeconomic factors are certainly contributing and pointing to that direction.
For sure. We were just showing the equal weight S&P really holding up, this month compared to Apple. There was a time, and a lot of folks will still say that as goes Apple, so goes, the rest of the market. Apple's down 10% from its high. Do you think the rest of the market can shrug off further weakness there?
I certainly do, and I think a lot of that came in what we saw with earnings. Even consumer discretionary was leading the way with beats, which is amazing, and that certainly suggests that demand shift from services to goods. But I think from this earnings season so far is where we can find those details of broader participation. There's still year-over-year increases of about 9% in CapEx spending. That's fiscal spending, reshoring, emerging AI, which is certainly needed for the job issues and the labor market headwinds that we've definitely discussed consistently. So I think there is broader participation that we see with the equal weight that will certainly help with that base case. Regardless if Apple's not there, we know that we need that broader participation to overcome those levels.
Yeah, for sure. The market has kind of answered that criticism in the recent months to some degree that it was too narrow. Jessica, thank you so much.